anyone with a connection to the internet now pretty much can establish or buy an insurance policy in the form of Bitcoin, which, just flipping back to the halving in this purple line, doesn't look anything like the volatility you see in monetary policy here in the United States and around the world.
Wait a minute, everyone. Welcome to Bitcoinzilla, your platform for daily cryptocurrency analysis and news. Our mission is to keep it simple. Bitcoinzilla offers engaging information that is easy to understand. Our analysts keep their eyes on the latest news to provide valuable insights via email. Don't miss out on this opportunity. Join our community of 10,000 subscribers and experience the new edge with Bitcoinzilla. Subscribe now. In today's video, CEO and CIO of ARK Invest, Cathie Wood, gives us an important market update on what's happening in crypto markets. Cathie discusses the Bitcoin halving and how interest rates impact innovation, and weighs in on the federal budget deficit, M2 money supply, and more. So without wasting any time, let's dive into the video.
All right, this is M2's M2 growth, and it's a 4-year annualized percent change. So from March this month to March, or this past March to March 4 years ago, what is the monetary growth rate at an annual rate? That would be the last data point here, which is, you can see the black dash line. So that rate is about 8%. And actually, probably it's closer to 6%. There's a lot of data on this chart. But take a look at the 4-year growth rate of M2. And you can see it's all over the place. You can see in the 60s and 70s, it moved toward double digits, and we ended up with double-digit inflation in the late 70s, early 80s. It took a while to get there, and it seemed to be very sticky.
A dormant Bitcoin address dating back to the Satoshi era has woken up after 10 years. The Bitcoin wallet, containing 687 BTC, $43.9 million, transferred its holdings to 2 different wallets on May 6. The wallet first transferred 625.43 BTC to an address starting with but 1 key and the remaining 61.9 BTC to one key. The movement of funds from very old wallets, especially from the Satoshi era, often sparks curiosity among the crypto community. The term Satoshi era relates to the early days after Bitcoin was created, when its pseudonymous founder, Satoshi Nakamoto, was active online in forums. Some Satoshi era wallets are often speculated to be linked to Satoshi himself. One such wallet woke from dormancy last year in August, nearly after 14 years, and transferred 1,005 BTC mined in 2010. The wallet movement created the most buzz on social media, speculating that it was Satoshi's wallet. However, experts suggest it is more likely associated with early miners or buyers just trying to make a profit. According to a Fortune report, a total of 1.75 million Bitcoin wallets have remained inactive for over a decade. Many of these wallets contain significant BTC holdings estimated to be bought when the BTC price was trading in double digits and is currently valued in millions. These dormant wallets contain 1,798,681 Bitcoin that are today worth around $121 billion. Over the past couple of years, numerous Satoshi era wallets have been activated only to transfer the BTC holdings to a new address. Some of these wallets were also found to have transferred their BTC holdings to crypto exchanges, which suggests they might be looking to take profits after nearly a decade. In July 2023, a wallet dormant for 11 years transferred $30 million in BTC. Later in November, 3 Satoshi-era BTC wallets transferred $230 million in BTC after 6 years of dormancy. The 3 wallets were believed to be connected to the same individual or organization, as they made their last transaction on November 5, 2017.
Very exciting times for Bitcoin. As we know, Bitcoin just underwent its 4th monetary policy halving, and ARK has been a part of 3 of those halvings, crazy to think about.
Yeah.
Dropping from a 1.8% issuance rate to a now 0.9% issuance rate, which for the first time in Bitcoin's history is now below gold's issuance rate. So just to level set on what the Bitcoin halving is, it occurs roughly every 4 years, and it really is an elegant reminder of Bitcoin's predictable monetary policy and its role as a scarce asset. So Bitcoin has a coded, mathematically metered supply that's baked into the software's rules, where the reward for mining a block effectively gets cut in half every 210,000 blocks, or roughly every 4 years. The first halving occurred in November of 2012, where the block reward was reduced from 50 Bitcoin to 25 Bitcoin. And this most recent halving has reduced the block reward from 6.25 Bitcoin to 3.125 Bitcoin per block. So as you can see in the chart, that issuance rate has gotten cut to below 1%. And the green line is Bitcoin's circulating supply, which is roughly 19.5 million of the total 21 million. So over 90% of Bitcoin supply has already been issued. From a price action standpoint, the Bitcoin halving tends to coincide with bull markets. So Bitcoin's now trading at roughly $60,000, and it's gone through a pretty nice reset after making all-time highs in March. And so we like to look at just healthy resets, healthy liquidations on the longs, especially during a bull market. And we've seen a 22% drawdown from the all-time highs, which tends to coincide with what we've seen in previous bull markets as kind of local corrections.
Of course, in emerging markets, anyone with a connection to the internet now pretty much can establish or buy an insurance policy in the form of Bitcoin, which, just flipping back to the halving in this purple line, doesn't look anything like the volatility you see in monetary policy here in the United States and around the world. And of course, it's controlled by human beings. When we went off the gold exchange standard and closed the gold window in the United States in 1971, monetary policy just became unhinged, and it has been unhinged ever since, although human beings have tried to contain the inflationary ramifications, and they take it too far both ways. And right now, we think they're taking it too far on the downside.
Bitcoin starts a new week with bullish sentiment back on the radar as $64,000 returns. In a stirring comeback, BTC price action has managed to leave its latest swing lows far behind it, gaining nearly $8,000 versus the pit of last week's sell-off. Despite some of those gains coming during the weekend, they've proven to have staying power, and during the May 6 Asia trading session, bears are having no luck pushing the market back down. The mood is thus considerably different into the second week of May, but increasing greed is already visible. Can Bitcoin and altcoins manage sustainable momentum toward all-time highs? This is the question that traders and analysts will be posing after a trip to 2-month lows and a considerable flushing out of leverage. On exchanges, things remain promising. Funding rates are neutral, and there are few signs of mass desire to long BTC at current levels. Should things take a turn for the worse, however, it is key support levels which will come in for a fresh test. These include the short-term holder, STA, cost basis, and 100-day moving average, both classic bounce levels. And do not forget to subscribe to Bitcoin Saylor. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.